Joining me now is Jim Iuorio, Managing Director at TJM Institutional Services. He is also a CNBC contributor. And Jim, these are historic times for the marketplace right now. We've talked to you about the traders' take on this whole thing. What exactly had you probably interested the most in yesterday's price action?
Well, yesterday's price action, when we started rallying later in the day, and the general thinking was that we were happy with the political wins compared to the day before. But realistically, it was probably when the Fed had the emergency cut and we broke off that. There was a kind of a classic buy the rumor, sell the fact. We priced that in a little bit, too. And there were so many short-term traders who wanted to sell that pop, and then they drove it into the dust afterwards. We were taking back a little of that. We had the political wins that buoyed us as well. And remember, we on this show, I've been listening for the last 20 minutes, and we've talked about the bear case for the economy and the bear case for stock market, and that's evident. The market somewhat has to price in worst case scenario. But I think we're forgetting that there's a fundamental buoy to that on the other side as well, is that the Fed has already cut 50, that people think they are going to cut more, global central banks will. When everything is said and done, if that liquidity stays in the market, and let's just say flu season passes like it normally does, normally goes through December to March, sometimes extends into April. If 3 weeks from now, 4 weeks from now, we haven't seen any big deal as far as an economic shutdown, all of a sudden that excess liquidity is still going to be out there. And where's it going to end up? I think it could end up in U.S. stock markets. I'm not saying that I'm a raging bull right now, but I think that this fight is fascinating as it goes on, and I think there's going to be some volatility, but ultimately I think I'm fine with stocks.
You know, it's funny that you mentioned that because obviously markets are about buyers and sellers battling it out. I've heard arguments made from the bulls that these particular situations now represent great buying opportunities because we were so overbought at one point that now stocks are on sale. Other bears come out and say, hey, you only really see these bouts of volatility in changes in long-term trends. So which camp do you really fall into here?
I fall in the one that I think this is probably good buying opportunities, but there is something that worries me here, is that anecdotally, everybody you talk to is like, nah, I'm not changing anything. I'm in stocks for the long term. The anatomy of a real correction and a deep correction, those people have to start questioning their long-term thesis and be like, you know what, I don't like the way things are looking going forward. I am going to rebalance. I am going to get out of some stocks. When I hear those people talk about that and see that last leg down, then I'll be more confident that it's over. But I think this was a correction that came at all-time highs. This is a very serious economic story without any question about it. But if you put it in perspective, in 2009, H1N1 came, 17,000 people in this country died. 1 out of every 6 people got it. The stock market didn't have a blip because in 2009 we had bigger fish to fry. We were on the lows. We were dealing with the Great Recession. So it wasn't the market hadn't been priced for perfection and wasn't as prone to a good correction as we are right now.
What's your favorite sector right now, given the recent market turmoil?
I'm going to say energy. Maybe I'm a glutton for punishment, but energy has just been pummeled. I'm going to begin looking at that for myself today.